Hello traders, this is Cousin Vinny coming to you from theclosingprint.com on February the 19th, 2017. In this edition of your weekend video newsletter, we'll cover the indices, all of which move to all-time highs together, suggesting that this is a broad-based rally. Tick in Tick Q shows that sentiment has gone parabolic. Therefore, both the New York Stock Exchange and the NASDAQ Composite are uber bullish. They're pulling away from their 10 EMA. We would expect that to come back and revert to mean at some point in the future. NYMO and NAMO both show that breadth is moving higher and bullish. The FANG stocks are mixed. They're 50-50. Facebook and Netflix were both down a little bit last week, whereas Amazon and Google finished up for the week. The New York Stock Exchange high-low is trending higher. The high-low percent is higher, plus 7 points from last week. It's higher, and it's starting to flatten out towards the end of the week. We expect that to continue. New York Stock Exchange advanced decline did fade from Wednesday, while prices did move a bit higher. So there is a tiny bit of a divergence there. CPC and VIX we're seeing both trending higher, as well as the VIX moving higher as volatility starts to increase. And SKU spiked to a high, which measures way out of the money puts. SKU is still lower than what we saw back in June of 2016 after Brexit. Currencies, US dollar rejected at the 50 MA, which we thought might happen. It is producing higher lows and lower highs at this point, so we'll watch how that plays out this week. That'll have an impact on the equity markets. Yen is trending higher. It's greater than the 9 and 20 EMA at this point, so we should see some temporary weakness continue in the Nikkei. We have the British pound US dollar pair at lows. That should bode well for exports from the UK. And we have bond yields all flat to sideways for the last few weeks. And TLT was rejected at the volume by price bands we pointed out last week. It's greater than its 9 EMA and the 50-period moving average. Big picture though, the UST SPX bond stock ratio is bullish as it continues to print new lows. Commodities, crude is at its 12th week, inside of a range that's about 0.3% each week, high to low, and in a range. Copper, 52-week highs, and we have gold at 1246, nearing target number 2 at 1250. The trend is still bullish. SOTMA is still trending higher. Sectors, we have XLP, XOY in a range, so that's flat, and the Heatmap trend is more towards green, with 10 of 12 sectors green last week. XLB and XLE continue to be the laggards of those 12 sectors that we follow. Macro trends, SPX is up 5% year to date with a record close, as we pointed out previously, on positive macro data. Positive developments center on a likely increase in U.S. infrastructure and defense spending, the prospect of tax relief for businesses and individuals, and a decrease in burdensome regulations. We pointed that out last week, a quote from Seth Klarman. So that looks pretty good for U.S. equity markets. International markets continue to improve, so it's more of a global rally. And actually, European markets and international in general is doing better than U.S. markets at the present time. We have a position in BTS and X. IBD50, of course, we'll always look at those for setups, and Bukowski's 405 green with a CPI signal green since January the 3rd, 2017. Starting off with the S&P 500 ETF, as we usually do, we put on some ratios over the past several months to outline the strength of current moves. This last move, this pivot low on B, to the pivot high and C were fairly equidistant. We do see that RSI has hit a similar level. Last time we moved sideways, slightly lower for a couple of days, and then obviously moved higher. The most important thing, though, that I'd like to point out is tick cumulative. This is institutional sentiment. It's not a lagging indicator, as you know. If you've read my book or you're a current subscriber, when tick cumulative is rising, it just tells you that institutions continue to buy at the ask or uptick, and as long as that's trending higher, the markets should continue. Once we see an inflection point, then we can start to anticipate a change in direction. The sector heat map continues to give us more and more green as we transition from red. For you skeptical traders out there, this trend is very visible and starting to build this sort of look. Now, it could also say that this is a little bit tepid in the change in trend, but I would expect that will be led by XBI, semiconductors, and banks over the next several weeks. And there are a lot of traders out there that will probably be chasing the trend higher after a possibility of a flag or sideways consolidation. I would anticipate higher prices, just based on what we're seeing here in sector catalysts. If you've read my book, you know that sectors are our catalysts and where we look for that rotation and cycle to ebb and flow. Right now, we have a tailwind in semiconductors, medical devices, XBI, XLV, among others. 10 of 12 sectors in total are green. So we have our new IBD 50 for the week. Doesn't look like we have much change. Let's look at the performance. CGNX was pointed out by a friend El Mono. That one popped to the upside. This was on the IBD 50 list last week. Let's take a look at what a good setup looks like. Okay, traders, that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com. We will update you on the watch list as well as some charts that we're considering entries with a blog post to outline our thoughts. Take care. We'll talk to you soon in the trading room.